Here's my pick if the interest rates go down. This was just from yesterday in the Wall Street Journal. Construction slowdown slams building supply shares. This one, that's all they do. Home Depot does a lot more than just building supply, so I picked this one instead. It's Builders First. They were doing okay this year until their recent earnings announcement. Stock fell from 200 to 163 in a day. So that's pretty ugly. So we know what that feels like when you're in the stock. And just like with JP Morgan, I'll do a quick example of this one. So at 164 a share, because that's where it was yesterday, 1,000 shares, 164,000 bucks. Option to control 1,000 shares. In this case, I picked 6 months instead of January of 2026. 22,000 bucks. Again, I like not having 164,000 tied up. I like having 22,000 tied up. And if Builder falls 20%, like it just did, your 1,000 shares, you'd lose 32 grand. 16 twice, 32. Options, you could lose the 22,000 you paid. So again, I like it on the risk side to the downside, and then to the upside, if Builder gains or regains 200 by November, the shareholder makes $46,000. If option holders, for that $22,000 investment, their option to buy the stock at 160 would be worth 40,000 bucks. Again, you invested 22,000 to make 40, or you invested 164,000 to make 46,000. And same trade-offs as before. It's not a perpetual, options aren't. You could pick the wrong time frame. You also sometimes misuse that leverage because you might say, well, instead of 164,000, if I'm only paying 22,000, what if I buy 10 of those? Now I've got 220,000 invested and I'm gonna make 10 times as much money. You're also risking, and you could lose 10 times as much.